I wonder, could you please share some info on protected rows?
You want me to go into that right now?
Yeah, why not?
Okay, so
I think it's very important for people to begin to understand.
I like to keep that one for myself. Yeah, of course. So protected lows are mainly down to SMT, right? So are we giving the source with breakaway gaps as well, or are we leaving that one for another time? Same scenario.
Maybe just introduce it a bit.
Okay, so Luke, the majority of these things, the majority of these things happen because of a break in correlation. Okay, so it's as simple as this: if we have one asset that makes a lower low, and then we have another asset that makes a swing, a failure swing, okay, then we have the other asset will then sorry guys, wait a minute. The other asset makes a lower low. Now everybody gets this confused, right? And I'm going to tell you how it is right now, and this is unarguable, right? There's no arguing with me over this one. So anybody that wants to say different, like, there's just no arguing, right? The asset that soups the low is the weaker asset, right? It's the weaker asset. The one that doesn't take the low is the stronger asset. Okay, there's a lot of confusion about this online. Loads of people get this mixed up. Now, we know that the markets, right? The markets do not have buying and selling pressure. Okay, so we don't have buying and selling pressure. This isn't people buying to make the market go up. This isn't people selling to make the market go down. The algorithm is pre-programmed. It's going to do no matter what it's going to do anyway. And what I mean by that is, if everybody went on social media tomorrow and said, right, let's go on S&P and let's all sell, everybody in the world, let's sell, and we'll just bump, we'll completely wreck the market. Yeah, we'll crash S&P, right? As ICT said, millions of people got together on Reddit years ago. They tried it, and ICT was sat there laughing because everybody sold and the market went up. Because the algorithm is programmed to go down, up, no matter what you're doing behind the scenes, whether you're buying or selling. So if everybody in the world got on social media tomorrow and said, right, let's sell off the S&P and we'll crash the market, right? What will happen? You'll all lose your money by the time this leg comes. It's that simple, right? But the way I will explain this to you is that way, for simple logic. So what this means is, right, as we'll mark this out so you can see. So if we said that this was ES, okay, and we said that this was NQ, right? So what would happen is, as price is coming down, there's more need, okay, for a buy program. In other words, yes, I'm going to say it, although we don't like saying it, there would be more buyers involved if you wanted to look at it that way. So more buyers involved, right, or a more need to buy to send the asset up. That means that this failed to take the low. That doesn't mean it's weaker, it means it's stronger, right? When this asset takes the low, it's because there's more need for sells, or if you wanted to look at it the other way, more people are selling than buying. So that means more people are buying this asset than they are this asset. So this asset fails, right? All you've got to remember is the one that soups is the weaker asset, and what you want to do is get involved in this failure swing, okay? And inside this failure swing, there will be another turtle soup. Go and investigate. So the protected low is this low right here on ES, right? We can use multiple confirmations. I'm definitely not going into that right now because that is some serious source. That can be done later, but basically we can set our stop here, okay, at the protected low, and this stop will not get taken, guaranteed. That's why sometimes you see me with no stop loss. I do not advise anybody to trade without a stop loss at all. Okay, it's only because I'm sat manually watching the trade and I've got my finger on the mouse and I'm ready to click the stop button at any time. But what I do want you to understand is this, for example, right? If I got it wrong, right? If I got the bias wrong, this stop could still not be taken until this high was hit. So once this high was hit, then I would have to take caution, because there is a possibility that if my bias was incorrect, price could come back down and take this stop. But at this point right now, right here from this failure swing, and we proved this failure swing, this failure swing cannot dig down again the second time. And there is some other tricks we can use with power of 3, okay, for this scenario when you get this second dig. Also, this is the same with breakaway gaps, okay. I would go and investigate. It has something to do with SMT. Go and have a look.
I wonder, Rich, could you maybe now include the opening price logic into this example?
What for this?
Yeah, basically to determine the CSD, that price is gonna run higher without taking notes of that low.
Okay, shall I go into the power of 3 scenario then and show?
Yeah, sure. It's exactly the same, of course.
Yeah, because we get, like, I know what you're saying, mate. Like on social media, we get questions all the time. People saying, "Look, so this is one reason why this low doesn't get taken, but there is another, more simpler version of this, and it's to do with power of 3. So what happens is, some people, even if they get this wrong, they put the stop loss there, right? And then then we get that second dig down, and this really irritates people. And there's something very simple and very logical, which again, nobody teaches, and nobody ever explains it properly. I don't think I've ever seen it explained properly. We can go into that right now if you want. So let me get rid of some of these drawings. There was a trade that I took the other day that we can look at. Let's get rid of those.
Yeah, I think the third would be a perfect example for you.
Yeah. So, what? Yeah, this was the third. So, I had loads of questions about this as well. So this will be a good scenario. I'll rewind this just so it's a little bit easier. So, what happens is, a lot of the time, we get this scenario. Okay, Asia gets swept here. Asia and London get swept, right? The lows. Now the 8 o'clock candle is the candle that swept the low. So what people do is, obviously, as we know, most professionals, we like to get in on the wick. So everybody is trying to bottom tip this right there. Hope you can see that clearly. Everybody's trying to tick this wick here, right? And I don't care who you are, I don't care how good you are, there's going to be a lot of people out there that made this mistake, and they took this turtle soup here and then got stopped out by the 9 o'clock candle. Okay, and the simple logic behind this is, what most people miss is, this candle opened high. Okay, so what we'll do, we'll make this simple for some of the beginners. Obviously the intermediate guys, you will know exactly what I'm talking about. Bear with me.
Please mind, Rich, he's not the best designer behind tech.
Here we go. I knew that was coming. Right, so I might not be the best. Listen, I'm going to say something now. Anyone that's good on computers is not a good trader, because I've noticed that everybody who's crap on a computer is a very good trader. So I just thought I'd put that out there.
Okay.
That'll cause some controversy on the social media. Let's see what that brings. Okay, so this candle opens. This is the 8 o'clock candle, right? This candle opens. Ignore the wick for now. I've just drawn it on for now. Okay, The candle opens, and then what it does, it starts to gyrate high. Okay, so this candle has opened high, right? So when it opens high, we wait to see what it's going to do, right? And yes, it soups these highs, these relative equal highs, okay, and then makes its way down. But the point that I'm getting at is, once this candle's opened and it flips the open, right? So once it's gone from this side, so it's gone high and it flips the open again, this is CSD, we're expecting this candle to then go short, right? But if you notice, this candle, when it's being made, right, and we're watching price, the candle gyrates like this, okay, and it goes lower and lower and lower, but it doesn't just go down like that. That's not how it works. It has to gyrate, so it gyrates like this and it builds the candle, right, before protracting and making a lower wick. Now the reason most people get stopped out here is not just because of time, but because of how this candle was made, right? So if you entered here, right, so you enter here, because this is a down candle, because it opened high, right, there's nothing to say that this candle is not going to keep gyrating and going down and down and down and taking you out. Okay. Now, the worst scenario is if the next candle was also an open high candle, you would not certainly even think about taking a turtle soup. For me, because this candle opened high, I don't take this turtle soup. Okay. For this reason, because the next candle opens low, right? Now, if you're going long, you only enter on a candle that opens low, whether that be the hourly, the 15-minute, or whatsoever, right? So then this next candle opens here, okay? And then the first thing it does is gyrates down, okay? So it gyrates down to make the wick, so it gyrates down. As soon as this has gone down so far, it comes back up, it flips the open, and then gyrates up higher. And the next candle also is the expansion candle, because we have accumulation, manipulation, distribution. Okay, we're going to look at this on a lower time frame. There is more to this, but you have to put everything together, because if you look, we have another low here. It's not a swing, but it's another low, and we make an equal low. One of the other assets will have swept that low and made another SMT. Okay. If we investigate here exactly what I was saying, I'm going to open. I'm going to mark the open of this candle, and I'm going to also mark the open of this candle, just to prove the concept. Okay, so now we'll go down to a 1 minute. Get rid of this dot, and on a lower time frame, this will make a lot of sense to some of you, right? Because look what happens. Here's the initial soup, right? We also get a rejection wick here. Let me zoom in. We also get a rejection wick, and then what everybody does is they enter here, right? They enter here, and then they get stopped out. And this is one of the biggest factors. I don't know about you, Zeus, but this is one of the biggest questions I get. Why is it I've entered here, we've souped, we've took liquidity, and then we've come down? Okay, there's a number of reasons. First reason is, right, this candle needs to open low. Okay, the 9 o'clock candle needs to open low. We also need to have SMT, right? And I will say this until I'm blue in the face. No SMT, no trade. I get questions all the time saying, Rich, does your entry have SMT? Do you have SMT on this entry? Listen, if I don't get SMT, I am not entering any trade ever without SMT. It's that simple. No SMT.
Rich.
Yeah.
What does the T stand for in SMT? We know that SM stands for smart money. What do you think it stands for, the T?
The T stands for wow. Okay, so what I'm going to do now is I'm going to follow the crowd, and I'm going to say SMT stands for smart money tool or smart money technique. That's what everybody says.
Yes.
All the educators.
What do you know it says or means?
Oh. You really want me to spill it today, don't you? So, right, so...
Let's give the people something to remember.
So now Zeus is trying to destroy everything, I think, at the moment. I think he's trying to destroy everybody and everything, because this information is just going to kill everybody. So, okay, here we have a... do you want me to do an example as well?
Yeah, let's do it, bro.
Okay, so here, right, we have an example of this trade. What I'll do... Okay, yeah, we'll go into the SMT thing straight away then. So if we look at this is a lower time frame market maker model here. Okay, we do have a larger market maker model also, but we'll concentrate on this one for now. If I was to say to you, right, that here we have the sell side of the curve, right, we have the original consolidation. Okay, the market maker isn't finished until the original consolidation's taken here. Okay, what we do know is this is the sell side of the curve and this is the buy side of the curve, but where everybody gets caught out is where the sell side of the curve and the buy side of the curve, where the sell side finishes and the buy side starts. Okay, and I'm going to give you proof of concept now, because when we have SMT here with another asset, for example, Nasdaq, when we have SMT here with another asset, from the very point that the SMT is shown, okay, which is right here, I'll zoom in a little bit. What can you see there now? Is that not clearly the sell side of the curve ending and the buy side of the curve, the very beginning of the buy side of the curve? Now, you hear people say time and price, right? And we've all seen the examples of people buying here and then going straight into drawdown by the time they get to here, compared to somebody who buys here and then goes straight into profit. And this is why. Okay, I believe SMT doesn't stand for smart money tool or smart money technique. It's clearly smart money time.
Gem.
And we get a lot of misconception about time and people trying to fractalize time, people using all different cycles and things like this, but true time is confirmed by SMT. Because is this the right time to trade anywhere on this side to go short? To go long, sorry. Anywhere here? Can you go long? No. But as soon as SMT is confirmed, can you go long? Yes.
And what do you see there inside this fractal when it comes to a very specific price pattern?
What's in every single... Okay, so let me clean this up then for the guys so that everyone can see what's going on. So everybody gets that principle. I'll let you go off and investigate. Now, I hope you understood what I was trying to explain about the open high, right, when you need to go low. And the reason everybody's getting stopped out here is because of you're not waiting for the candle to go open low. Yes, it does go a little bit higher, but you can ignore it. You just wait for the real move. This was only a few handles. This is the real manipulation, right? We can all anticipate 930 making the SMR, okay? The candle opens low to go high, flips the high, it flips the open, never to come back again. Now, what you need to understand is the algorithmic signature that I'm going on about being the unicorn model, right? But the true unicorn model, not a breaker fair value gap like all the other donkeys on social media talk about. These educators that are you're just wasting your time with, honestly. If you look here, here's the breaker, right? Now we have the unicorn model right here, right? This is perfect for me. Yes, we don't get the BISI in the enter, but what we do get is the immediate retest here, which is perfect. I prefer these. Okay, I'm getting in on that all the time. Now, the real source comes here because everybody's missed this. Everybody's missed it, right? Think of the logic that I showed you with the candles open close, right? Bear with me. Here's the candle. Let's say, for example, this is a down candle, right? So this is a bearish candle. Guess what? There's a unicorn in this top wick. 100%. They may not look the same, they may not be as neat as this, they may not present themselves exactly the same as this. Every down candle has a unicorn in the upper wick, okay? And the same for an up candle. Sorry guys, bear with me. Then for an up candle, every single open low to go long, guess what? Unicorn model in this lower wick. So we'll have a unicorn in here and we'll have a unicorn in here. Guaranteed. Maybe not always the same shape, size and entry pattern, but always, it's like a snowflake, okay? Everybody knows what a snowflake is, but every single snowflake is different to look at. Same here, look. If we look, we do have a unicorn in here, okay? There's one on the lower time frame. I won't use that to confuse some of the newer people. But what we can do is we can use this breaker if you wanted to. We could use the breaker lower down. They both work exactly the same. When we look at this model, here's the unicorn to go long. Every single wick has a unicorn model or some kind of unicorn model. And again, like Zeus says, this is an algorithmic signature, right, to tell you, right, that this is the move, this is the time, this is the price, okay? So if you look here, price comes down, digs through the liquidity, but guess what? Here, yes, there's a breaker here on a lower time frame. We're not concerned with that. It's not significant, okay? Here, there's no major breaker. Here, we have a breaker, okay? So we can keep an eye on this breaker. But, wow, what happened then? So this breaker, as price is printing, we're keeping an eye on it, right? But look, This breaker never gets closed above. So as soon as this happens, we get this first rejection wick, right? We get this fake displacement. We get rejection wicks again here. Nothing closes above this high. That is the fake move. Price comes back down. Okay, we get another displacement candle. Nice. Okay. Closes below the bodies. Forget the wicks. Closes below the bodies. This candle. We go down. I'm watching this breaker create as time's printing, as price is printing, right? As soon as I get this signature, I know that it's time. We have SMT, right? For those of you that don't know, SMT, the right SMT, forms in the first 30 minutes of the hourly candle. And we will have a unicorn. And this is all you need.
Rich, we of course did the Tabda live stream back in end of November,
Yes.
and that caused for a lot of, I'd say, eye-opening moments for a lot of people. But I think this masterclass right here will have exactly the same result, if not more.
Okay, good, good. And
I think many people will re-listen to this, or have to re-listen, because there are so many concepts that have been shared, like these small little gems that people likely listen over and then just forget about them. Well, my advice to those people would just be re-listen to this, because the amount of knowledge that is being shared right here, insane.
yeah, nice one, mate. I didn't want to go too in depth. Obviously, there's a lot more to it, but the thing is, there's a lot of negativity online, mate. And what people don't understand is, we try to give out. Well, if like we give out as much as we can for free. Do you know what I mean? Like it's all free. This is information that if you run with it, you can be profitable tomorrow. If you listen to this video again, right? Add this on to all the knowledge that you've already got. Like, there's enough information here to go out and be profitable, and it's all free. Do you know what I mean? And you get people negative on social media. It's unbelievable, mate. But
Yeah, of course.
yeah, this is
Yeah, we of course can't guarantee that people become profitable, but it's just the knowledge. Like when you start seeing it, it repeats so many times.
yeah, mate. This is why people have to be vigilant, mate. Like, you can't. Everybody thinks, right, that going on the charts, trading in demo and not concentrating is the way forward, and it's not. I have calls with many people, and I tell them to stop trading, to stop demo trading, and physically watch price. You have to physically watch price. You have to watch it print. Like something as simple as this here, right? As we know, consolidations can't reverse, right? So we expand or manipulate in the other direction, right? We sweep this low, and as soon as we sweep this low, we notice that these candles do not close below. As soon as these candles don't close below, we can anticipate higher prices going back in the original direction. And it's these little things that people don't notice that make the big difference, and it's all because they're not looking, they're not watching, they're not paying attention, because they're too busy watching the price tag go up and down and worrying about a demo account, or thinking about the Holy Grail and Enigma and all these things that Enigma people aren't going to share with you anyway. ICT only knows the real Enigma. Yes, some of us do know the algorithm to a degree, to a high level, maybe not to ICT's level because that's his thing, but instead of worrying about everything else that's going on with trading, you need to concentrate on these important things, like everything we've gone over in this video, and actually watching how price prints. And like you advised me a year and a half ago, Zeus, reading price and understanding price action is key, mate.
That's it. And if you understand the framework that you're within, it's all just these small little things that you can add on top of that just give you a level of confidence
Yeah.
that is unmatched
Yeah.
because you know that it should work this way.
Yeah.
And if it doesn't, it's wrong.
Yeah.
Your whole analysis is off. We were discussing this the other day, you remember, like it people often question, well, what if I get stopped out? What if it does take out the protective row? Well, then you know that's not gonna run how you think it's going to run.
Exactly. And what people miss is, Luke, I always reiterate this. Okay, so draw on liquidity, right? Higher time frame order flow and draw on liquidity, other than time, is one of the most important aspects of trading, because if you know that price is going to go from A to B, right, or the low to OTE, all you've got to do is find an SMT anywhere in that leg, right, and it won't fail until the draw on liquidity's hit. It's that simple.
So you don't only look for SMTs inside of your smart money reversals,
Nope.
but also for your entries.
Also for my entries, every entry, even on even on a unicorn model, will have SMT. I use what's called entry SMT. So for example, if we look at this entry model here, let me clear this up, we don't need all this now. If I was thinking of entering, most people would enter in this fair value gap here, right? They probably wouldn't even wait for this breaker, right? If I waited for the breaker, which would be the sensible option, okay, I would be looking for this. Okay, yes, I can show two options. Oh, I can show two options in one here. So let's do that. Let's get rid of that. If I was entering in this fair value gap here, for example, right, this candle and this candle on another asset, right, would have SMT, candle to candle SMT, what I call candle to candle entry SMT. So let's see if that is the case. It's not always. So this particular one does not. So we'll go down to the lower one. Okay, perfect. So if you look, this is ES, this is NQ, this is YM, right? If you were entering in this fair value gap, if we look, these make equal highs, right? So ES is the stronger asset to trade. Okay, when you see ES not take the high of the entry candle, wowzers, these guys are getting the money out of me today. Look, I'll zoom in so we can see this clearly. This is entry SMT. You won't hear anybody talking about entry SMT, right? NQ takes this high. This is why you get open gaps. This is why some people miss the move, right? And if you look, the SMT, Nasdaq takes the high, soups on the 1 minute. ES doesn't. You enter on ES. Okay, but you do not enter on this candle, right? Yes, sorry, you can't enter on this candle. This candle opened high. So because this candle opened high, you can enter. As soon as these two candles open high, the second one of these candles takes this high to the left into the fair value gap. This is a high probability turtle soup fractal on the 1 minute. It's no different on a higher time frame. Any turtle soup inside a fair value gap is high probability, right? Now, here's the source. Because on ES this is a protected high, you can enter anywhere in this wick, or to be safe you can even wait for this candle to close and open and enter on this candle, because this candle also opens high. I would already be in here. I will show you now. I would probably be in by this level here by the time I've looked to double check what NQ is doing, right? Then, believe it or not, my stop loss would be here, because this is now a protected high. Or, as you see sometimes, I do not even have a stop loss. This is why. Okay, and if we look, this is going to make some people sick. We have a 0.75 handle stop loss. So on average, my stop losses are in between 1 handle and 3 handles.
The thing is, I think that many people think that, oh, he doesn't have a stop on, so therefore he doesn't know what he's doing. It's quite the opposite. You know exactly what
Look,
you're doing.
I know,
Because you're monitoring how price is moving right
look,
there.
I'll prove it right now. So, as you know, mate, because we are now in a sell program, right? The draw on liquidity, right? Even if I don't zoom out, right? We can clearly see just from this aspect that the draw on liquidity is these equal lows here, right? I'm gonna show you guys now exactly what happens. Look, it's very, very simple and logical, right? It's just that all these idiots on Twitter and social media don't explain it to you, right? You enter here, this is a protected high, but I already know that this high is a protected high also. So when I got this displacement candle here, right? Look, there's the BISI. This is the displacement candle. Once this displacement candle closes below this BISI, we can just enter here if you wanted to, right? I don't advise beginners to do that. I advise them to wait for the breaker, the retest of the breaker, because this is the algorithmic signature to say price will not go past this level, right? And I'll prove it in multiple ways in 2 seconds. But once this is in a sell program, right? Once we have proven time, right? So now this is the buy side of the curve, this is the sell side of the curve, right? Not just looking at the original consolidation, right? But just order flow in general. When price is coming down, look, standard procedure, this is standard turtle soup framework. We do not take the low here, look. For any of you that are vigilant, this is a turtle soup framework. It does this and repeats over and over and over and over again, right? How many times have you guys seen in my videos, right? I'm in a sell from the top. Price comes all the way back up to OTE, then comes all the way back down, then takes liquidity. And it's what it does here. It repeats over and over and over again on all time frames. Okay, so it doesn't take here, but I'm confident because price cannot take this protected high until this draw on liquidity is hit, and the proof is right here. And yes, I'm going to get some idiots saying, oh, it's hindsight. Yes, it is hindsight right now, but I took this trade, I was in this trade, so I can comment on it, right?
I think that's one of the main things you and I are so strong on when it comes to teaching people. It's like there are so many people out there that just speak about things in hindsight, but they can't execute it. They can't utilize the theories that they apply live, because it only works in hindsight, and they have 10,000 different theories for why price goes up and down. If you would study exactly what Rich and I are doing, it's always the same.
Yeah.
Always.
So,
and that shows application of knowledge.
So just a quick one here now as well, because look, we've hit the liquidity. Now we can take this high, this protected high, or this protected high, and that's exactly what it does. Look, price takes liquidity. Now it goes into a buy program, because guess what? Time is correct. Now we're in a sell program. Now we can take this high and this high, but we can't until we hit the liquidity. So when the liquidity is not hit, I already know that this is safe and this is safe, right? Now, Look at what I'm going to show you, because some people are going to say, yeah, but Rich, you didn't do OTE. That's because if it didn't do an OTE, that's because you don't understand your ranges, right? That's the only reason OTE doesn't work, right? So when we do what everybody does on social media and we go from the high to the low, oh, it didn't work, Rich, you're lying, you don't know what you're on about. No, mate. It's because your educator or the idiots that you're listening to don't know what they're on about. And now, this is the range, this swing high to this swing low, and wow, look at the precision. It's unarguable. This is the range, this swing high to this swing low is the range that we are working in right now. Not this range. This range is over. Unless we break this range and we close above. If these candles close above, this range is high, this range is EQ, then I would pull the fib to this range. And then we would expect some kind of movement from this range. Now, to prove the whole theory again, what am I going to do? Okay, I'm going to pull the fib to this range low and watch this OT react. It's the same. Look, see how we don't close above. Okay, we have one close above, one close below, that's fine. Again, it proves that we're not going higher. If one candle closes fully above and then the next candle closes fully above, two candles close above, then we're going to go higher. This is what reading price is. This is reading price. It's looking at how the candles react at specific levels, at specific times. And this just repeats and repeats, and we see the same thing day in, day out, and nothing changes. It's identical.
I think that's a great way to end this masterclass. What do you think, Rich?
Mate, I think they've had way too much out of me.
I'm sure that they have a lovely Sunday after
Yeah,
this.
and you
Family time will be completely gone probably.
yeah, and you wanted to just give it all away for free.
Mate, sometimes it's important to just do good
No, mate, that's
for others.
that's why I'm the way I am on Twitter, mate, and that's why, yes, sometimes I do advertise people that I believe in, which is only a handful. You being one of the main ones. That's the only way you can do it, mate. Look, you give as much away as you can for free, but at the end of the day, mate, we all can't just sit round helping everybody all day, every day, or we'd never get anything done. But again, to some of my followers out there and some of your followers, yes, we don't explain everything down to a T, because again, if we just give everything away, people wouldn't work for what they've got. People don't appreciate what they've got when it's given to them. So I'm still a big believer on giving people the information to run with, but then they still need to go out and do the hard work to prove it, to research themselves like me and you had to, you know.
Yeah, of course. It's all about putting in the time and effort.
Yeah, for
That's
sure.
it. If people want to follow you, Rich, where's the best place that they can go to?
Yeah, Twitter. They can go to Twitter at richthebull008. They can catch me there.
Yeah, it will be in the description
Yeah,
of this recording as
Yeah.
well. And we'll also link you the recording of your Telegram, or the link of your Telegram channel, I'm
Yeah.
sorry. Because if people type in your name, of course, on Telegram, there are a lot of scammers pretending to be
Yeah.
you. And it's very important that people don't fall for that.
yeah, exactly. Yeah, we
I want to thank you for your time. I hope that everyone learned something from this, from this webinar. I'm sure that at least one light bulb moment occurred because, man, so many gems were shared. And I think that we should all say thank you to Rich. So if you enjoyed this webinar, please reach out to us on Twitter. Just tag me and at Rich the Bull, and then we'll interact with you and appreciate you for your time.
Yeah, cheers, guys.
Is there anything else you would like to add
No,
to us?
mate, I just like to say thank you very much to everyone that takes the time to watch the video. Like you said before, I would watch it over and over again. You may pick up on some things that I said. And I hope everybody has a good weekend.
Perfect. Be safe, guys.